Eric Sprott, Rick Rule, and Keith Neumeier are three successful resource investors coming together for one simple reason: to buy cheap assets from distressed companies and seize this once-in-a-decade opportunity to buy gold, silver, and other mineral projects for pennies on the dollar. First Mining Finance Corp., trading on the TSX Venture under FF, a recently launched venture with the sole purpose to acquire advanced stage natural resource projects, and starting on day one with 18 projects, management has already identified over 60 additional projects to acquire. Learn more about First Mining Finance at futuremoneytrends.com/investright.
I knew this was coming. There were warnings.
America is in dire straits. The day before the new fiscal year, Congress and the President passed a new continuing resolution that barely funds the federal government for over 2 months. By December 11th, a new budget or continued can kicking must be accomplished. At least those worried about their SNAP benefits being halted can delay their anxiety a good 60 days. But the paranoia can remain. As Sean of SGT Report calls, congressional martial law has just occurred, which allows Congress to violate rules and procedure by fast-tracking the stopgap spending bill, meaning no one had time to read it. Boner's resignation came at just the right time to avoid mainstream media blame for the upcoming budget crisis and government shutdown. Expect some distractions around that time to divert Americans' focus away from the real issues facing America. Recall that in 2013, there was a terrorist attack scare perpetuated by warmonger Senator Lindsey Graham right before the government shutdown October 1st that year. For this year, Thursday, October 1st, this was not only the start of a new fiscal year for the U.S. Gov, but another mass casualty shooting or false flag that will be used as fodder to fire the gun control cannons in Washington, D.C. again. President Obama already capitalized on this issue by holding a press conference the same afternoon. Silver shot up to $15.30 Friday as a physical shortage is steadily showing signs. Mike Maloney has pointed out that Silver Eagle premiums have increased from 15% in June to over 33% now.
This reflects a fundamental tightness in the supply of the entire silver industry. And it's made it very difficult, all of the mints right now are backed up 6 to 10 weeks.
Since the 2008 crash, preppers and those weary of a bigger crash have had 8 years of depressed silver prices. These great prices for silver stacking could finally be coming to an end. For those unprepared or understacked, don't say you didn't have enough time. SRS Rocco report shows us that global physical silver bar and coin investment demand quadrupled during 2011 to 2013 versus 2005 to 2007. 2015 is expected to be the highest demand on record. Supplies are already so tight that the Royal Canadian Mint is supposedly contracting the Sunshine Mint to produce its 10-ounce RCM silver bars. But according to Sunshine Minting CEO Tom Power, their mint is already running all day long at full capacity at an estimated 75 million ounces for 2015, which is 3 times the output of 2008. Gold is down for the week, but shot up Friday with silver to reach $11.38. Oil is trading mostly flat week over week, though slightly down. Though U.S. production is finally dropping, Russia's is still rising, with Russian oil output reaching 10.7 million barrels per day in September, up 0.4% from August. As oilprice.com reports, this is the highest level the country has seen since the fall of the Soviet Union. By the end of this year, we should clearly see the decline in U.S. shale oil production in the charts from the U.S. Energy Information Agency. Finally, the Dow closed 200 points up, making us slightly up month over month, but down about 8% year to date. The S&P rose 1.4% today to make itself only 4.7% down for the year. Today's rise can be attributed to the supposed 142,000 jobs the economy added in September, keeping the official but misleading unemployment rate at 5.1%. The 142,000 was short of the predicted 200,000, and also in the report was a lowering of the July and August gains. The August figure dropped 21%. Labor force participation is at its lowest since October 1977 at 62.4%. Even Reagan's former budget director, David Stockman, admits that we're on the fiscal Titanic. It's safe to say people are expecting no rate hike and even QE coming soon. The next FOMC meeting is right before Halloween, and the last one for the year will be December 15th and 16th, days after the current U.S. budget stopgap measure expires December 11th. Will the title of last week's popular ECN episode ring true? That QE4 will come after a government shutdown.